Stocks right now trying to hold on to their early morning gains. The S&P futures now just basis points change to the upside. Tom White's with me in the studio looking at some options on some stocks that Mish Schneider likes. She's joining us, chief strategist at marketgauge.com. Mish, good morning. Let's kind of connect some of the macro discussion we've been having into some of the stock picks. You've got an interesting list of companies you're watching. Does the inflation data this week change anything of what you're interested in or what you feel confident in?
Well, I've been sort of anticipating that we could be heading towards inflation, or some people would call it reflation. So in terms of what I'm looking at, I'm trying to have somewhat of a diverse portfolio so that I have exposure to commodities and also exposure to some companies that might be able to get a pass if we do have tariffs extended, mainly companies I think that have a concentration here in the United States.
The domestic trade, the one that gives you the most confidence, U.S. best house on the block?
Well, it depends where we're looking, right? Because John Deere, as we know, did not report well. That's a U.S. company. I think you have to really think things through. What would have pricing power? This is a conversation we had in 2021, and here we are having the same conversation in 2025. Different reasons, but same results. So that's why you saw IBM on my list, for example, because we're dealing with a company that has pricing power, also dealing with quantum computing, things like that. And then in terms of the consumer, I'm really looking at more at what I'm calling vanity trade, which is consumer habits that have changed a little bit more into health and beauty and exercise as a result of the diet drugs, also as a result just of less spending on the family and going out and more spending on people individually. So, you got to really kind of think when they say it's a stock picker's market, you also have to keep the macro in mind with that. And yeah, I mean, we certainly can see Mag 7 has struggled a little bit, but for me, that's almost a relief in a way, because when the market's so concentrated like that, it's very difficult to follow the flock. And I like this sort of other areas to be looking at. I mean, let's go back to commodities, right? So silver, gold, copper, DBA just had a major breakout. That's the agricultural ETF. So, I mean, I think you kind of have to think maybe stagflation and then what would get a pass.
Love that. Good analysis from the macro into some of those stock picks and themes, how they connect. Let's go back to IBM for a second. I think that one's interesting because, as you mentioned, the Mag 7 as a whole have stalled out. A few have been still doing very well, but some have broken down. I think a lot of folks, like we see with Cisco, are maybe looking for some of the underappreciated tech names. And some of them fall into this kind of legacy category. Even Intel's been on a nice run the past week. Well, what's interesting to you about IBM, and where do you think they could go?
Well, first of all, it had a great earnings gap higher, and so it's holding that level of consolidation. So if you sort of miss that, what you'd really be looking for right now with IBM is for it to take out, say, 260. And then if it can get through 260 again, it's been sort of trading between 245 and 260. Then I think what you have is a situation where you can see 350, maybe even higher. Of course, market conditions always prevail. If we get some kind of major liquidation all around, that will affect everything. But that's a company that everyone forgot about. And now all of a sudden, Big Blue is back in vogue.
Love it. Tom, tell me about the options in IBM. Is there any activity there, or folks trading it like they do some of the other popular tech names, scooping up out of the money calls, stuff like that?
I think they have, but post-earnings, it seems like, as Mish mentioned, consolidation. And that's the way that I looked at IBM as it sits below those all-time highs that we hit just post-earnings of about 265. So it's consolidating around the 255 level. So I looked at a strategy short-term, about 8 days to expiration, February 21st, monthly options, where I'm going to sell an iron condor. And I positioned it as a short iron butterfly, where I'm going to sell the at-the-money 255 call and put in the February monthly cycle. And then against it, because I want to stay risk-defined, because anything can happen. You know, if the entire market moves, IBM might move with it. I'm going to buy the 245 strike put on the downside, and then buy the 265 strike put or call on the upside. So $10 wide short iron condor, short iron butterfly here with that same common strike. I'm collecting a credit of about $5.30. So that's what I can make up potentially on this trade if it continues to consolidate around 255. But I've got a nice wide range to remain profitable on this one, about 249.70 on the downside and about 260.30 on the upside over the next week. So looking for some more consolidation here. We're past the event risk, and this is positive time decay or theta on this trade, where as you get closer to expiration over the next 8 days, that time decay is going to ramp up, and that'll contract the price of this. But what you're looking for is just a range-bound trade over the next week in the strategy.
All right. That seems like it makes sense because it has been kind of establishing this new kind of volume node up here.
Yep.
Mish, let's talk Nvidia real quick. Give me a quick thought because it's been hanging in there above 130, but still hasn't quite recovered its deep seek breakdown.
Yeah, I think 235. I'm sorry, I'm giving you the wrong price. 135 is going to be key here. If it can get through there, then I think you'll start to see some buyers flocking back in. And, so we're in a really, really tight range right now. Under 130, maybe you'll start to see more selling. It would not necessarily be my favorite stock to go to. I actually think the chip narrative and the AI narrative, although we haven't heard much about tariffs in that area, is something that we need to keep a little bit of a mind in terms from the fundamentals. So that's why I'm kind of moving beyond that. And what's been really beat up, well, I shouldn't say really beat up, it's come down from the hype, has been some of the quantum computing. I mean, IBM obviously is solid, but us looking at stocks now more like in the QUBT, which really went from like nothing to up to about 13, 14, and now is trading here at around 8. These are the kinds of things that have a future. So I'm not so necessarily interested, even though I believe AI has a future, no doubt about that. But from a trading perspective, I'm really looking for the best risk reward. So like I said, Nvidia over 135, maybe I take a quick shot. I'd get stopped out though under 130. I wouldn't want to stick around, but I'd be more interested in things that are basing out and going up. And now we have a good solid base to risk under.
Understood. Like that. So we're getting close to 135, 133.83 this morning. Mish, thanks a lot. Like the specifics there on the charts. Helpful, good analysis, and fun stock picks. Appreciate it very much.
Thank you so much.
Tom, tell me about Nvidia. I like Mish's point about 135.
Yep, 50-day moving average. It failed there a couple days ago. But they've got earnings on the 26th. So I want to avoid that earnings event when developing a strategy here because anything can happen. We've seen that over the past couple of years here in Nvidia. It can move. So I looked at a strategy that just takes advantage. If you think it's going to continue to grind higher, maybe hang out between 130, 140 or something into that earnings result. This takes advantage of it. Selling an out-of-the-money put vertical. I just went out to the February 21st monthly cycle, so 8 days to expiration, avoiding that earnings event. And a lot of times we'll see stocks kind of cruise higher into those earnings events, and this would take advantage of it. Selling the 130 strike put, buying the 125 strike put, short $5 wide, neutral to bullish. Put vertical, collecting roughly, I've got $1.50 credit on here. It's probably down to about $1.20. The stock has continued to move higher, back above 133 now. But if you collect $1.50 credit, it takes your break even down to 128.50 to the downside. That's a cushion of about 3.5% from current share price here. But, it's conservative. It's risk defined in case we do get something that comes out where it sends the entire market down or Nvidia down ahead of that earnings event. You're still protected because it's risk defined here. Risking about 350 to make 150. You profit in 3 out of 4 scenarios on this trade.
All right. Not a bad way to do it. Sell the vertical to the downside. Yep. Look for Nvidia stabilize. Appreciate it. Thanks, Tom, for the trades. Thanks, Mish Schneider, for the ideas.